Hello, ladies and gentlemen. Welcome back to the X-Force Global channel. Today, we're going to be talking about meme coins and where we sit on the current timeline. Do we have a good buying opportunity? Well, if you've been following me on social media, I did give my update on PEPE, and meme coins are following the path of PEPE, more or less. But if you look at our last example of where we were, um, back a week ago, actually, I talked about that there is a possible buying opportunity just because even though we breached those 618, we did get supported by it with a few candles on the 1 day chart, which indicated some kind of strength. Let alone we dropped, I think, 50 to 60% and 70% on even a few altcoins within the meme coin um, realm of meme coins. So if we look at the current structure, I was saying that we are in a possible primary wave 4. So if we look at the current timeline, we did get a pretty good 50% bounce. Now, is that a dead cat bounce? I mean, it could be. Maybe we're working for another corrective structure, just like what I have outlined here, where we can be working in a possible ABC or ABC going into wave W, X, and then Y. That could retest the 786. That would be even a more huge buying opportunity. But nevertheless, we did get a bounce again, and that 618 held very nicely. And that was one of those interesting zones that I was personally interested in. Now, one of the biggest things with PEPE is that it doesn't have much price history. So it's difficult to say whether this is going to be a continuation of an impulse, but it's also the opposite as well, where it's difficult to say if we're entering a bear market territory. We don't know. We just don't know. But with the current data that we have, I could definitely say that we're in some kind of larger cycle degree of a continuation to the upside. And we might as well just say that because the markets are still bullish until proven otherwise, right? So what we have here is we have a 5 wave count into pretty very clean 5 wave move into a prime or a cycle wave 1 and a cycle wave 2. ABC, market efficiency happening here. So we definitely have some kind of ABC or a 3 wave move into a cycle wave 2. Very clean 5 wave move into another primary wave 1, and then a 3 wave into 2, and definitely 3, 4, 5 into a wave 3 extension. So definitely a very, very clean looking wave 3 and very parabolic. That's hopefully what I want to see for Bitcoin, but we didn't get that. But meme coins in general are currently going nuts, right, on the larger macro scale. We did reach the 1618, so it's definitely wave 3 characteristic. We didn't necessarily hit the 2618. But this zone in itself is a wave 3 territory, so any kind of pullback is going to be considered or assumed a wave 4 of the primary degree. So since PEPE is kind of the front face of what meme coins are, this is probably going to be the best way to assume whether your personal meme coin of a lower cap coin is going to be following suit or not. Higher risk, but who knows? High reward possibly as well if PEPE is able to continue its run. So if we see here, if we're working on a current cycle 1, 2, 3, 4, 5, we're going to see a very huge gain, and that's not unnormal within the cryptocurrency of 25,000%. We've seen some coins do 200,000%. So it just takes time. But we've done this in such a short time. This is just a 1 year gap, and we already seen a 2,000% gain. But it is what it is. I think for now we are seeing this internal structure very clean for the time being, for a bottom of a wave 4 if we're seeing that this is an ABC. But again, we do have the option to continue the correction. So I wouldn't be surprised whatsoever if we did go for another 3 wave style corrective move to the downside. That would create overall the same path for a wave 4 that would put us into the primary wave 5 to finish the similar targets. But for now, I'm just assuming that the bottom is in, just based on what we have. And if not, then again, I don't want to be bold and say that we're just going up for the wave 5. We're going to have to see what happens in the course of the next few weeks, months as well. But overall, this is still an okay buying opportunity, in my opinion, not financial advice, that a 63% pullback for any kind of wave 4 caliber is a very interesting buy zone for me personally. And I'm not personally getting into meme coins, but this is something that is rising in interest because I think a lot of people are not focused on Elliott wave theory, and Elliott wave theory gives us a kind of a good narrative and observation outlook on how we can continue to the upside or downside. So again, those are the two different ways that we can look into it, whether this ABC is completed as a primary wave 4, or we can, continue. And this is going to be the beauty of Elliott wave, because if we do create another 3-wave style of a correction, maybe we're already creating that 3-wave style and we go back down, and that'll be even more of a sharp correction. Or we continue up and then we come back into the 618 zone of this Fibonacci retracement, and then we come back down into the normal Fibonacci retracement of this wave 2 to 3 into the 786 or the 618, depending on if we do a double corrective correction or not. And then again, same idea, should lead us to the similar targets. Now, these are just observations and assumptions, right? And that is part of what the LA wave theory is going to be giving us, is the assumption that a wave 4 is coming into the territory of these Fibonacci retracement golden zones, and they're very important for overall market as a technical analyst as well, because most people who are not versed in LA wave theory also use Fibonacci. So that is also, a high percentage of the markets who are looking at these very important support levels to not break. And that's why we're seeing, 2 weeks of data where on the 1-day chart that it's being supported on the 618. So there's temporary support. And again, that was one thing that I was personally looking into, and we're already seeing that 50% bounce right now as we speak, right? So whether this is going to be continuing, I'm going to be monitoring if on the shorter time frames, if this is creating some kind of impulse or 3-way move, and then some kind of zigzag of some sort of a zigzag variation. We could be already creating this 1, 2, 3, and then we come back down, and then go up, or again, a larger, 3-way move into this and then come back down. It's all just part of how these Fibonacci levels are going to be reacting or not. So that's one way we can look at it. Now, since the price action is so short, the problem with this is that it doesn't look so well on the linear chart, right? The linear chart meaning that since price extreme was so, it's chaotic in this short time, it's very difficult to find a reliable count, especially if we're saying that we're in a cycle 1, 2, 3, 4, 5. It's going to be even more extreme as time goes on. Usually, these moves to the upside makes the linear chart very difficult. So we want to use a logarithmic chart and see how the price action is going to be reacting in that manner. So in this case, I was originally anticipating to have wave 3 of the cycle degree labeled here, and then have labeled this cycle wave 4 around here before this major move came down. But I was monitoring that and it just didn't look right. But for now, even if we're labeling this as a wave 4, we don't want to say wave 4 going into the territory of wave 1 is a legal validation. It's not validated. Even on, well, I guess you could say that according to the LA wave principle, leverage markets can, say that they'll accept some scenarios where wave 4 can go back into the price territory. But either way, I don't want to say that this is a 3-4. And again, we would have to say that this is a 3, 4, 5 of the primary degree. So I don't want to say that this has a better look on the linear chart, but when you're taking that out of the picture and you're using this doesn't look proportionate. So there are some internal sacrifices that we have to make. Maybe let's pull up the PEPE spot charts. Let's see if there is some kind of spot chart that is showing similar price action. No, this is the original crypto chart. So I would say no, we would have to force ourselves to say that even on the linear chart that we're working in the 3, 4, 5, and we're working for primary wave or cycle wave 3. So I think we're going to be working for a wave 5 here. Again, we want to stick with the logarithmic chart for the time being. We don't want to stick with linear. We want to stick with the log chart here as much as we can, because that's the only data that we have, as it does take away the overall extremities of what the market is telling us. So that's one way we can look at it, PEPE. And then similarly, we're seeing, like I said, the same structure is being built up. So for example, we're looking at FLOKI, right? FLOKI is another kind of sub-sister counterpart with PEPE, and we're seeing even a better look, in my opinion, even more or less, right? We still have that similar type of 1-2 idea or cycle, whatever you want to call it. But for now, I have it labeled as a primary 1-2. Similar idea, we have that ABC that we had for PEPE. Another clean 5-way move into this intermediate wave 1. And then another 3-way move into wave 2. And this internal structure is looking nice as well. This is also very similar in style of correction. This also moved up 54%, even more than PEPE, right? So again, I even have it labeled here with this Fibonacci zone. If we come back up and retest the 6-way and we get rejected quite strongly, then I do believe that this might have been turning into a 3-way move, just like the PEPE. Same idea. Overall, we're looking for what Fibonacci levels are going to be telling us and whether this wave 4 is going to be created and we continue to the upside. Let's see what the linear chart is telling us. Now, the linear chart is now giving a little bit of a better information. So if we're saying we remove the internal counts here, we can say that wave 5 was highly extended of the intermediate degree and say possibly whether the cycle or what primary 3, however you want to label it, is that it didn't overlap into the territory of this wave 1, right? So I think this is another possibility where we could be a little bit more conservative about our targets and say that if we're working for a wave 5 of any kind of degree, then we can say that wave 5 is going to just end here instead of continuing up. And that is more of the rational way to look at it. And I think if we're seeing that no overlap is happening with FLOKI, maybe PEPE, we can accept the fact that that wick into wave 1 territory is acceptable, since the Elliott wave principle in text, in the literature, tells you that sometimes cash markets versus leverage markets also have their inefficiencies where overlapping will happen very quickly, and that is what we saw for PEPE. But since FLOKI is also telling us a different story where it didn't overlap into territory, this gives us a conservative target that possibly the cycle 1, 2, 3, 4, 5 for PEPE is also going to be ending. And then if we look into PEPE over here, maybe that this really is some kind of market inefficiency, and we can just say that cycle wave 5 is going to be ending here rather than continuing a continued structure for how this is going to be playing out, even though it might have the right look. So there's that risk mitigation factor that you have to take into mind by looking at FLOKI's chart as well. So if we look at FLOKI chart, again, still looks good on the logarithmic chart. So I still would assume if we're trading up at these levels, see how this primary degree or cycle degree wave 4 pulls back, and then we'll work from there. But that's going to take some time, possibly a year or two, and then we'll kind of revisit that as well. So again, ladies and gentlemen, that is the overall look for meme coins. I don't want to go into any other meme coins. I think these two are just kind of the forefront face of what meme coins are kind of looking into. I do believe that there's a possible wave 4 in the creation here. We just need a little bit more data. We have the first set of data, a 63% pullback is already a large pullback. But if we do come back up and then come back down, I wouldn't be surprised. And then we can come back up and retest these. So this is something to revisit later on in maybe a year or two. Maybe we're done with the cycle. Maybe we come back down. Who knows? We never knew this was going to happen, right? We never knew this was going to happen either. But it is what it is. So we just got to manage expectations of the macro and also using the idea of the linear versus the logarithmic chart on both PEPE and FLOKI, what they're telling us, because they do intertwine each other with the internal counts. So that's it. Ladies and gentlemen, thank you very much. And if you are interested in joining the members only group, please remember the X-Force Discord membership. The link is in the description below. Please do contact me if you're interested in trading like these altcoins. I do go over a lot of other altcoin analysis. I just can't share them all here because there's just far too many. I only could really give the macro output on or macro perspective on how these accounts do play out and the overall expectations. So again, ladies and gentlemen, thank you very much. I'll see you guys in the next video. Thank you very much. Bye-bye.